Good afternoon, everybody, and welcome to this edition of our weekly Broker Moves review for Friday, 4th of June. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets, and it is a pleasure to be with you as we check out all of the big broker moves from all of the big brokers for all of the big ASX stocks for the last week. Hey, we'll do that after we talk about the ThinkMarkets Difference, which is substantial, $8 flat rate trades, your own holder identification number, unlimited phone support, and of course no hidden platform or subscription fees. 4 fantastic reasons why your next ASX share trade should be with ThinkMarkets. And if you're new to the ThinkMarkets family, sign up and get trading before June 30, and your first 5 trades are on us. There are some T's and C's, so head to the website for further details. The agenda for today is to first check out the key ratings, upgrades and downgrades. We'll check out the big price target changes and then have a look at a couple of stocks of interest. First up, the upgrades. Don't forget, each broker has a rating system for each of the stocks they cover. Basically, buy, hold or sell, telling their clients what action they should take on the company. They'll also have a price target system based upon their valuation of the company, essentially where they think the price could get to over the next 12 to 18 months. Let's look at the first one on screen today, Bluescope Steel. Now that has had its rating upgraded from neutral to buy, and its price target also going up from $22 to $25, and that is an increase of 13.6%. And based upon the current share price of Bluescope Steel, that allows a further 12.2% increase to hit that target. Citigroup noted strong steel and scrap metal prices are bolstering Bluescope's earnings and are expected to continue to do so over the medium term. That has left Bluescope with a whole pile of cash, which Citigroup thinks it could return to shareholders in the near term. On Electro, Optic Systems Holdings, that's a mouthful, ticker code EOS, Citigroup, also going from neutral to buy, but decreasing their price target from $5.28 to $5.15. That's a decrease of 2.5%, but still about 16.5% seen to the upside on that one. Citigroup noted the recent share price weakness as a reason for the ratings upgrade, effectively the company looking like better value. At the end of that, they said that the company had resumed collecting cash from one of its key customers and that its revenue is being progressively diversified. The market is also potentially underestimating new contract opportunities. On Citigroup, again, going from sell to neutral on Pilbara Minerals, a nice increase in the price target from 110 to 130, about 18%. But Citigroup thinking the company is more than fully valued despite that price rise. Citigroup updated their lithium price assumptions, spodumene and other lithium products, and as a result of that, we'll see a few tweaks on various lithium-focused stocks in today's presentation. JP Morgan actually did exactly the same thing, updated their lithium price assumptions, and therefore also managed to come up with a new valuation for the company, a 31% increase in their price target, no less. But again, the company is still overvalued in their eyes, and hence we're only getting to a lighten from their previous sell rating. On Scentre Group, that is SCG, UBS have gone from sell to neutral. They have retained their price target. Company still a little bit overvalued at current levels, and UBS really just changing that rating on the basis of recent share price weakness and therefore potentially seeing a little bit more value in the company, or that it's less overvalued perhaps. Having a look at the downgrades, not so lucky, Centuria Industrial Reit, ticker code CIP, going from buy to neutral. The price target going up though by about 5%. Company is about fully valued, and therefore, that's why we're getting these sorts of neutral ratings. UBS cited the recent share price appreciation for potentially challenging the value proposition on that one. Another property trust here, Dexus Group, Macquarie going from outperform to neutral, but notched up the price target slightly, and again, fairly fully valued there in Macquarie's eyes. They said that the company has limited balance sheet flexibility and positive earnings drivers. They said that headwinds will persist in the future as divestments, lower occupancy rates, and increased tenant incentives undermine earnings growth going forward. Not so good for the office property manager, obviously hit pretty hard as a result of COVID, and to some extent people moving away from working in offices. Galaxy Resources, this is part of the lithium price and lithium product price tweaks at JP Morgan, nothing more, nothing less. We've seen a small increase in the price target there, but the company relatively fully valued. They're still at accumulate though from buy. And News Corporation, UBS, going from buy to neutral, a bump up in the price target, still about 10% seen to the upside. But UBS noting that recent share price strength again is making the company look less attractive from a valuation perspective. But they do note the strong operational performance of the company, in particular their digital real estate platforms, hence the price target increase. Okay, price target increases here, no ratings changes. And don't forget, you can press pause at any time and see if your stock is on screen. We're just going to focus on the big ones. Not a bad one there from Ampol. Morgan Stanley, it's a bit of a delayed response to the news that the government is going to, they've got a large support package for the refining industry, so a tweak there to the price, and still a fair bit seen on that one, about 19% upside, and Morgan Stanley at overweight. Macquarie on APE, that's a nice bump up in the price target there, about 20%. Some of it's catch up, some of it's with respect to the fact that they see strong operating conditions ahead as continued tailwinds from the pandemic impact the business. For example, higher spending on used and new vehicles amidst the backdrop of restricted supply. It's hard to get vehicles in, and therefore AP Eagers, as a seller of used and new vehicles, is able to maintain quite a nice little margin at the moment. Still about 10% upside and an outperform. Next one is Boral. That's mainly catch up, really. Credit Suisse there just catching up to the $7.50 bid that's on the table from Seven Group. We've talked about the Bluescope one, Capricorn Metals, Macquarie, quite positive as the company looks to pour their first bar of gold. Macquarie also likes the exploration potential. A big price target increase there, but really only getting that target up to where the share price is now, and they are at neutral. As a result, Goodman Group, now UBS noting that the company continues to enjoy strong margins and earnings growth as demand for warehousing remains robust. IGO, a little tweak there from Citigroup because they do have a lithium exposure. Into the next page now, Mineral Resources at JP Morgan, ditto lithium exposure on that one. Pact Group Holdings, now JP Morgan likes this one because the company is increasing their market share and is also benefiting from the recent restructure. Big pop up in the price target, but not so much left in it, I'd suggest. But JP Morgan's still comfortable with their buy rating at this stage. A couple of big ones there on Pilbara Minerals, but we know why. Looking down the list, Super Retail got a little bump up there. Macquarie Group thinks that consumer spending, the local consumer, will continue to do just that, and that should support earnings. But we can see they think the company's fully valued. And it's a bit of a theme there, isn't it? We're getting some nice price target bumps, but really only to bring those targets up to where the share prices are right now. And there's nothing really special on that last page, is there? Let's head to the price target decreases now. Again, just focusing on the big ones, and really there's only one of any note there, and that is AGL. And it was an odd commentary from JP Morgan because they actually upgraded their earnings estimates by sort of between 15 and 20% for the next couple of FYs. They said that the company's probably at the bottom of its earnings cycle and price cycle that it can charge consumers, and was fairly upbeat on the company going forward, but they're really just sort of bringing some of their price targets in line to the current market consensus and adjusting to the current share price moves, and that's reflected in the price to target there and a hold rating. So not a lot of excitement in those lists. I'll try and give you some excitement here in Orocobre. We heard earlier on that Citigroup had reviewed their lithium market demand supply dynamics. They believe that there is some strong demand out there for lithium products, but it is amply met at the moment by plentiful supply, and probably prices are going to go sideways for the time being. Even so, they believe that Orocobre is their top sector pick at the moment. JP Morgan, in increasing their price target slightly from 715 to 740, retained their accumulate rating. I should say that Citigroup went from 675 to 760 and retained their buy rating. But JP Morgan said that they continue to view lithium prices are at a comfortable balance point, pretty similar to Citigroup, isn't it? Hence no change in the current price forecast for lithium, but they do note that there is going to be some extra value pulled out of this merger between Orocobre and Galaxy. It is going to therefore result in a very attractive combined opportunity as they describe it. And the chart looks very attractive as well. Look, it's pretty much bottom left, top right, isn't it? But certainly we have a very well-established long-term uptrend, a really nice short-term uptrend here. Candles look fairly constructive. Price actions not too bad. We've moved back into higher peaks and troughs. Look, I think this is a key level up here, that resistance there. It's probably 737.40. It does seem to be playing on the market's mind at the moment. If you're not in it, I probably wouldn't get too excited until we saw something maybe like that. If you are in it, then I definitely think it's certainly worth holding. We held above this key support level here at $6 pretty convincingly, and as long as we stay above that, then I think we're okay in that trend for the foreseeable future. Looking to the rest of the brokers, we do have an average of a buy, 3 strong buys, 2 buys, 4 holds, no sells, but 1 strong sell, which is a little curious and disappointing because you'd never like to see those around. Mean target will probably go up as a result of these 2 upgrades here is 614, which does represent that the company is fairly fully valued at the moment. And based upon my own analysis of the fundamentals, I would agree with that. The company is fully valued at current prices. We do have a high estimate, however, if it means anything to you, of 870. Having a look at the fundamentals, I can't get a whole lot out of that. There's really nothing going on there because the company is in a recovery phase. It did lose money last year. It is expected to make money next financial year. It's going to return to profit, and then it's a question of how well it can do from there. So I can't give you a reading on this. This is probably a tick. This is definitely a tick, but just be careful with the valuation is my advice. Having a look at Origin Energy, this one has less of an issue with the valuation because unlike the PE of Orocobre, which is about 130, its FY22 PE is closer to about 15, as we can see here. There is clearly some earnings growth in the system because the FY21 PE is about 25.83. So for it to drop, it means earnings must be expected to rise. We've got a really nice dividend here. Yield here, 4.27%, expecting at current prices to rise to 4.95%. Enterprise value to revenue is excellent. Market average is between sort of 3 and 6, so that's very good. Price to free cash flow is amazing, much better also than the market average. Return on equity is disappointing, and that's where it falls down. I can give that a very solid B. Really, return on equity is the key disappointment there. Brokers seem to like it. Once again, 1 strong sell, but otherwise fairly positive with 1 strong buy, 6 buys, 3 holds. I'm happy to give that a tick. That's a tick. The chart is a cross, unfortunately, because we are very much in a short-term downtrend. Long-term downtrend is well established, but I do note we are starting to interact with it. So it's not a no forever. It's just a no for now. I'll show you what we want to see on the chart. So if we can see something like this, okay, then we're going to be looking much better. So potentially you might get an opportunity in here to buy, or you might be a bit more conservative and wait till you get above sort of that level there. But we are projecting into the future. We need to see some sort of peak, trough, and then break of the peak action. And that would tell us we are moving back into a positive price action phase, and one would then expect that the averages would follow. But a very strong rally in here on some volume is encouraging from the technical perspective. As I said, going to reiterate my weight view on that. Looking at what the brokers had to say, JP Morgan, a modest price target increase, but did retain their buy rating. They said that they are anticipating improved energy pricing ahead, and therefore they upgraded their earnings expectations for the company. They note, as a result, Origin is well placed to generate strong cash flows and is their key sector pick. That's nice. From Macquarie, again, a modest price target increase. They did retain their outperform rating. They believe that a combination of stronger energy pricing and oil prices will underpin an earnings recovery. Origin appears to be bottom of cycle at the moment with respect to both, and therefore FY22 and FY23 earnings are on the up and up. So that all sounds pretty good. Just need the chart to turn around. That's it for me today. Don't forget you can catch all of our updates in our market news section of the website. News, views, analysis and opinion. I also put a bit of that out on Twitter, so you can follow me, all the Think Markets handles there. And don't forget to head to the webinars section of our website and register for our upcoming webinars. Next week, Ask the Experts, where you get to bring your portfolio to the table. Tune in and literally ask me about any stock or crypto or index or commodity that you're interested in. I'll give you on-the-spot fundamental and technical analysis. The disclaimer before I leave you today says that everything we've discussed is general in nature. Don't forget, we are a regulated Australian broker. We do have some products that could see you lose more than your deposits. So make sure you read this disclaimer carefully, or if you have any questions at all, please give us a call. It's been a pleasure chatting with you today. All the best for your trading until we catch up again. Bye-bye for now.